Welcome to this session. My name is Barbara Gochalia, and I'm going to be taking you through natural resource economics. Let's look at changing our very first chapter, which is the changing perspectives on environment, right? So I've shared the course guide, and you realize that most of the textbooks, they are labeled natural resource and environmental economics, right? So basically, yes, we shall be looking at the natural resources and the environment. So when I talk about environmental economics, natural resource economics, I'll be using them synonymously. So let's look at the key terms here. Natural resource economics, basically, we are looking at that field of economics that applies the economic principles to natural resource issues and environmental issues. And then we shall be looking at concepts like ecological economics. For example, ecological economics here, it takes a broader perspective, right? So it takes a viewpoint that it looks at the environment in different perspectives, right? So it brings together viewpoints from different academic disciplines, and it will not only look at the resources in terms of economics, but it gives a broader view of different fields and disciplines, like we are going to find out later on. So what are the main principles of natural resource economics? So we shall be looking at a number of concepts or main principles, which are basically four. We shall be looking at the theory of environmental externalities. Those are the main, though there are other topics that we shall be looking at. We shall be looking at the theory of environmental externalities. We shall be looking at optimal management of common property and public goods. Then we shall also be looking at optimal management of natural resources over time, and then economic evaluation of environmental goods and services. So let us look at what each of these ones mean. What is an externality? What is an externality? What we have to know is that an externality is a market failure. What we have to know is that an externality is a market failure, and it can either be a cost or a benefit of market transaction that is not reflected in the price of a commodity, right? So yes, we realize that those market failures, we shall be looking at them, of course, in terms of the environment and natural resources. And then, of course, when the market fails, we are going to see that at the end of the day, the government comes in to correct those market failures. And then we shall also be looking at issues of common property resources, right? Common property resources like oceans, the atmosphere. And the question is, who owns the oceans? Who owns the atmosphere? Those common property resources, they are those resources that do not have private ownership. And because of that, we have scenarios whereby, because there is no private ownership of these resources, at the end of the day, they are exploited. For example, overfishing. And these ones, for example, we know that overfishing depletes these natural resources. It depletes the marine organisms. And then we shall also be looking at public goods, right? Public goods, issues to do with public goods like national parks, wildlife reserves, and then that are not privately owned. At the end of the day, we shall have issues of over exploitation, right? So all those are issues that we shall be looking at. This is just an introductory part of it. And then with externalities still, with externalities, we realize that we have, for example, air pollution. Air pollution is a negative externality in production, and we see that if, for example, pollution endangers human health, right? So how do we deal with that pollution so that it does not endanger the human health and the natural resources? We shall be looking at that in details. So I've already given a brief description of some of these key concepts, but it is also very important for us to look at them here. For example, I've talked about externalities, and an externality basically is a cost. It can either be a cost or a benefit of market transaction that is not reflected in the price of a commodity. So it can either be a positive externality or a negative externality. For example, if it's a negative externality in production, it can be, it is pollution. It can be pollution whereby, for example, these factories, during the process of production, they emit these greenhouse gas emissions into the atmosphere. And at the end of the day, the question will be, how do we attach price to the pollution? Right? So we shall be seeing all that. And then market failure, what do we mean by market failure? Market failure is whereby the free market fails to allocate resources efficiently, right? The market fails to allocate resources efficiently to the society. And then we shall be looking at common property resources. And we've already seen that these are resources that do not have private ownership, right? For example, the seas, the oceans, right? The fish in the sea, who owns the fish in the sea? Public goods. Public goods are those goods that are characterized by two characteristics. They are non-rival and they are non-rival and they are non-excludable, right?
Yes.
So we identify that we have ecological economists, and these ecological economists basically they describe, they have three core concepts that they base on the ecological economics. For them, they say that an economic system is a subset of the broader ecological system, like we are going to find out. And they also say that sustainability should be defined according to ecology rather than the economic criteria, right? And then also for them, they rely upon a wide range. They rely upon a wide range of disciplines, right? They do not only look at economics, but they rely on a wide range of other disciplines while looking at environmental issues. Those are the ecological economists. We shall be looking at the differences between environmental economics and ecological economics, right? So let us look at the relationship between the economic system and the environment, the relationship between economics or the economic system and the environment. We shall be looking at this by looking at what we call the circular flow of the circular flow model, the standard circular flow model. And I believe that we have looked at this circular flow when we're looking at macroeconomics, if you can remember. So this is the circular flow model, and basically, let us first look at the circular flow model, and then later on we shall see how it can be related to the environment. So with the circular flow model, basically it shows the flow of resources, or the flow of factors of production between different sectors. With the circular flow activity, we are basically looking at the flow of factors of production between different sectors of the economy. Here we have two sectors of the economy. We have farms, we have business farms, and we have households. Those are two sectors of the economy, and this is a two-sector model, right? So here with the circular flow, basically, like you see these arrows, we see that the households, when we talk about households, we are basically talking about individuals. So these households, for example, they provide factors of production, they provide farms with the factors of production. And what are these factors of production? Land, labor, capital, entrepreneurship, right? So for example, households will provide labor to farms, when they are working in these farms as employees. And in return, these farms will make payment to the factors of production. In return, these business farms, these employers or these business farms will make payments to the factors of production. And what are these payments to the factors of production? For labor, it will be wages. For example, if these households or individuals they are working in this factory as employees, they will be paid wages, they will be paid salary, right? And if, for example, they provide, maybe they are selling land, at the end of the day, they are going to be paid rent, isn't it? Right? And then for example, if they initiate, right, entrepreneurial skills and they start up these factories, at the end of the day they will be paid profit, because profit is a payment to entrepreneurship. And then capital, right? If they are providing capital, maybe they are providing loans to these farms, then at the end of the day, they will receive, these farms will be paying interest. So I hope that is clear. And then also we have other arrows here, households, we are seeing that these business farms, of course, after the production process, for example, they produce the final goods as goods and services, which they sell to these households or individuals. So we are seeing this arrow shows that these farms are selling these goods and services, the final goods and services to these households or individuals. And in return, of course, as these households are buying these goods and services, they are making a payment. They are paying money or income to the farms, to the business farms. So basically that is the circular flow of the circular flow activity, the circular flow of economic activity, or the circular flow model, right? But that is for a two-sector, model. It can go on to be for a four-sector model, whereby we have four sectors of the economy. We have the business farms, we have the households, we have the government sector, and the foreign sector, which is also known as the rest of the world. That is a simple circular flow diagram that is basically showing two sectors of the economy, the business farms and the households. So like we've seen in the diagram of the circular flow of economic activity, that the standard circular flow model basically illustrates the ways goods, services, capital, and money flows between households and businesses, right? For a two-sector model. And the natural resources, basically here, we are referring to endowment of land resources, including air, water, soil, forests, fisheries, minerals, right? All those ones are natural resources. All those are natural resources. All right. So I want us to look at, I'm not going to read everything for you here, but I'm just going to explain to you the basics, all right? The basics. So what happens is that we've been looking at the circular flow model, but at the end of the day, we realize that this circular flow of economic activity it ignores some concepts, right? It ignores some concepts. And the environmental economists realize that there are limitations. Environmental economists realize that there are limitations of this standard circular flow. And as a result, they say that it ignores a number of items, right? A number of issues. For example, it ignores issues to do with pollution, which can either be air pollution or water pollution, right? It ignores the element of pollution. It also ignores elements of the ecosystems, right? The activities of the ecosystems, as we are going to realize. So this circular flow, that the standard circular flow has just been showing us the flow of economic activities or the flow of factors of production between different sectors of the economy. But now the environmentalists are saying that no, this standard circular flow model is leaving out a number of items. For example, what we are going to see, we are now looking at it at a broader perspective. Yeah, as we see it in terms of environmental economists. So environmental economists go ahead and say that no, it is not only the standard circular flow model that you've looked at, because with the standard circular flow model, for example, we've just been looking at this element here, where we are looking at the flow of goods and services, right? Payment to factors of production, right? So that the standard circular flow model is limited to that. But now environmental economists are saying, no, there are elements that we are leaving out. We are leaving out elements, for example, solar energy, right? We know that solar energy or this climate is favorable for us to do our economic activities. Are we together? It's favorable for us. Solar energy, for example, the solar energy is a source of power, right? It is a source of power that can be used for us to do our economic activities, right? For example, when electricity goes off, you can use solar energy. So the environmentalists say that no, the standard circular flow model is leaving out issues to do with, for example, solar energy. It's leaving out issues to do with the, for example, waste heat. Yeah, waste heat, that the heat that is generated from the waste. Yeah, for example, industrial waste. It's leaving out issues to do with natural inputs, right? Natural inputs into the production process, right? The natural inputs, for example. Of course, we need these inputs. We get, for example, the timber from the forest, yeah, that can be sold. Are we together? We get all these for the pharmaceutical companies. They get these leaves, yeah. They get these leaves and make the medicine from those leaves from the forest. So that element. So the environmental economists are adding all these elements, right, to the original standard circular flow of income that we've been looking at. They also look at elements, the environmentalists, they also look at elements of what? Of pollution and waste, that, you know, with the standard circular flow, we only look at the economic activities, flow of resources, payment to the factors of production. But is it considering the pollution, as these factories are manufacturing these goods and services? Are they considering the pollution, those greenhouse gas emissions like carbon dioxide that are emitted to the atmosphere? Are we together? So all these are elements that environmental economists are ironing out. For them, they are looking at it, the environment at a broader perspective. They are adding all these other elements, and they are saying, no, the standard circular flow of economic activity is leaving out all these elements. And they look at elements of recycling, yeah? They look at elements of recycling. For example, we've seen that these plastics can be recycled. Are we together? So basically, that is what the environmental economists look out for, right? So we have natural resources, and the natural resources, they can either be renewable resources or non-renewable resources. So renewable resources are those resources that can be regenerated using through ecological processes. What do I mean by regenerated? Regeneration means they can be replenished. Yeah. For example, forests, fisheries, yeah. If you cut, for example, a tree, we know that you can regenerate, isn't it? You can still plant this tree, or even these trees will grow by themselves, right? We shall see vegetation growing by itself. There it means that it can be replenished. It can be replenished. The fisheries, we see that if we fish, of course, on condition that we are not overfishing. We are fishing up to a given level, required the amount of fishing. Are we together? So they can be replenished as long as we are not again fishing up to the extremes, as long as we are not fishing up to the extremes, or as long as the extraction rates do not exceed the natural regeneration rates, right? So that is the assumption. Those are renewable resources. Then we also have non-renewable resources. Non-renewable resources cannot be regenerated through ecological processes. Yeah, they have a fixed supply. And what are those non-renewable resources? For example, we have coal, we have oil, we have gas, we have mineral ores. Those ones are non-renewable resources because they cannot be replenished, they cannot be regenerated, and they have a fixed supply. For example, oil, of course, if it is over-drilled, it will reach levels where it will get depleted, it will get exhausted. Yeah, it will get exhausted from those oil wells as long as at a certain time in future, as you continue drilling, extracting that oil, it will get exhausted and it will be normal. So that's what we mean by non-renewable resources. So natural resources are either renewable or non-renewable. Right. So let us look at what we mean by sustainability, sustainable development. So sustainable development basically is that kind of development. And when we talk about development in economics, basically we are looking at a number of aspects. We are looking at, for example, improvement in the welfare of human beings. We are looking at economic development. Now, let me first explain maybe the economic growth. Is there a difference between economic growth and economic development? Any difference between the two? Yes? Economic growth and economic development. Is there any difference? Yes?
I think a difference.
Yes?
I know there is a difference.
You are breaking.
Development and growth, they are same words. Like they contribute to the same words. Economic development and economic growth.
You are breaking. Hello? Can you hear me?
Hello.
Can you hear me?
Yeah, I can hear you, madam.
You can hear me?
Yes, please, I can hear you.
So if you can hear me, I'm just going to explain because for you, your sound is not good. You're breaking. So there is a very big difference between economic growth and economic development. Economic growth is a subset of economic development. And with economic growth, we see that it is only considering GDP, what we call gross domestic product or national income. Economic growth is measured in terms of GDP, gross domestic product, or the national income, which is the total value of final goods and services produced in an economy, right? So there, if, for example, the GDP in this year was, let me say, this much, right? Because it is measured in terms of, let me say, shillings or dollars, right? If it keeps on increasing per year, then we are looking at economic growth in terms of, for example, percentage rates. Are we together? There we shall say that the economy is growing economically, economic growth. But with economic development, it will consider economic growth fine. It will look at economic growth in terms of GDP, gross domestic product or national income. But it will also have a look at the standard of living or the welfare, the standard of living of the citizens. For example, it will look at elements, the literacy levels. The national income may be increasing in figures, but are people are they literate enough? Are we together? Are they literate enough? Are they receiving enough education? It will look at the life expectancy, So it is looking at the well-being of these citizens, right? It is not only looking at the figures in terms of the national income or the GDP. It will look at the life expectancy. It will look at access, for example, to health services, right? Access to health services, much as the national income is increasing, are these people having access to the health services? Are we together? So economic development looks at all those. And now, having looked at a brief definition of economic development, we see that now sustainable development means that it is that kind of development that meets the needs of the present as well as the needs of the future generations. So it looks for the needs, that's the kind of development that will look for needs of the present situation, right? Of the human beings, but and also the needs for the future. For example, we are looking at maybe if a forest is being cleared down to construct a national park, is it sustainable? Is that kind of development, yes, the money is coming in, but is that kind of development sustainable, right? Is it sustainable? Because a forest has been cleared. And people have been getting, earning a living from this forest. They've been selling the timber, that kind of thing, right? But now, is it sustainable enough in the long run? Is it these forests are cut? Is the climate safe? Are we together? Because yeah, as you're cutting these trees and you're not replanting, at the end of the day, we are going to see issues of climate change, issues of desertification. Are we together? So it's sustainable development. It will not only look for the needs of today, but it also look for the needs of the future. For example, you're cutting a tree now, but how is it going to affect the future generation? Will they have a chance to look at these forests? Are we together? So I hope we are getting. And then anthropocentric worldview. Anthropocentric worldview. So anthropocentric is basically that kind of perspective that places humans at the center of analysis. It places human beings at the center of analysis, right? For example, if you're looking at pollution, you're asking yourself, is this pollution it's going to affect human beings, and so that kind of thing, right? You're basically fighting for the standard of living of human beings, as we are going to find out later on, right? And then the ecocentric worldview is that perspective that puts the natural world, it puts the natural world. When you talk about natural world, we are talking about the natural resources, yeah? The natural world at the center of analysis. And then pluralism, plural. I hope you know the word plural. Pluralism is that perspective that believes that an issue arises out of a variety of disciplines, viewpoints, and approaches. For example, pluralism may be that you believe that an environmental problem is arising from a number of different causes. Are we together? We are going to understand all these concepts as we continue later on. So remember that we are looking at, we want to differentiate between environmental economists, ecological economists. So environmental economists, for them, they are anthropocentric in nature, right? Environmental economists, they are anthropocentric in nature. And what have we seen anthropocentric in nature means? It means that for them, they look at humans, yeah? Their perspective looks at human beings at the center of analysis. They look at human beings at the center. Those are environmental economists. Are we together? For example, if they are looking at pollution, they will look at pollution in a perspective that pollution is harmful to human health. Are we together? Those are the environmental economists. They are anthropocentric in nature. They look at they'll look at issues that for example, that affect human health. For example, they will look at pollution and they will say, no, pollution is not good because it affects human health, right? And then the ecological economists, for them, they are ecocentric in nature. They are ecocentric in nature. And what have we seen ecocentric worldview means? Ecocentric means that for them, they place nature at the center of analysis. For them, for example, if they are looking at pollution, they will look at this pollution being harmful. For example, to the for example, they will look at the pollution in terms of water pollution, where they will say that no, this water pollution is polluting. Maybe the chemicals that are being emitted into the rivers are affecting the marine organisms. So they will look at the pollution in that perspective, that this pollution, for example, water pollution, is affecting maybe the what? The marine organisms. Are we together? So basically, environmental economists are anthropocentric in nature. They look at humans, they put humans at the center of analysis. They look at humans at the center of analysis. All right. And then we've seen that ecological economists, they are ecocentric. They put nature at the center of analysis. And then we've seen that pluralism here looks at it believes that, for example, an environmental problem will arise out of very many different causes out of very many different causes. And for it looks at these environmental aspects are used through different disciplines, not only economics, but other disciplines as well. So let us still continue with the differences between environmental and ecological economics. Environmental and ecological economics, right? So environmental economics, economists, for them, when they are looking at environmental, when they are looking at environmental goods and services, they tend to place monetary value. So for environmental economists, they place monetary value on environmental goods and services. And someone may be asking, how do you place a monetary value, for example, on a forest? Can you place a monetary value on a forest? Yes, yes, you can do. And we shall be looking at ways of how to place monetary value or to value the environment. So those are the environmental economists. And according to economics, a good or service, a good will have value. A good or a service will have value as long as people are willing to pay for that value. A good will have value as long as people are willing to pay that for that good or service, right? And ecological economists, whereas environmental economists, for them, they attach value to environmental goods and services. Ecological economists, for them, they don't look at it in that perspective. For them, they look at the environmental goods, they look at environmental goods, the value they attach to environmental goods is in terms of inherent, what you call inherent value. And this inherent value can be in form of ethics, rights, and justice. For example, an ecological economist will look at maybe these animals, these wild animals, yeah, the gorillas, those wild animals, yeah, the chimpanzees, and the value they attach to that chimpanzee. For them, they will say that no, you cannot simply poach these chimpanzees. You cannot simply kill these lions because they have a right to live. Are we together? If you're killing them, you're doing injustice to them. So those are ecological economists. They attach the kind of value they attach to environmental goods, right? Or the kind of value that they attach to the environment is in terms of inherent, what we call inherent value. For example, when they are looking at these wild animals, for them, they will say that you cannot just kill this animal because why? Because it has a right. That's the right to live. So those are ecological economists, right? Then we've already seen that an economic value means economic value for a good or service. The good or service will have an economic value as long as people are willing to pay for that good. If people are not willing to pay for that good or service, then that good does not have economic value. We've already looked at inherent value, and then market-based solutions. All these we shall be looking at in details, do not worry. So market-based solutions basically are those solutions that their economic incentives basically aimed at changing the behavior, to bring about behavior changes. For example, we shall see that, for example, the government comes in and taxes. The government can either tax or subsidize, right? For example, we shall see that with the negative externalities in production like pollution, we shall see that one of the measures that the government uses is to basically tax these polluting farms. It taxes these polluting farms. imposes taxes on these polluting farms, but the whole essence will be to discourage them from enable them to reduce the pollution, right? Because if they are overtaxed, at the end of the day, they will have to reduce the output produced, which output produced, if reduced, it will definitely reduce the amount of pollution, right? So those are the market-based solutions, right? So we are still looking at the differences between these environmental economists and the ecologists. Some people use the words synonymously, but there is a difference, right? And then these environmental economists, for them, they advocate for market-based solutions. Like we've already seen that these environmental economists, they attach value to environmental goods and services. And so they also go ahead to advocate for market-based solutions. What are market-based solutions? We've already seen that market-based solutions are those economic incentives that are aimed at bringing behavioral changes. For example, taxation of these polluting farms aimed at making them to reduce their amount of output produced, and therefore the amount of pollution reduced. So in summary, let us look at the differences. In summary, the differences between environmental economics and ecological economics is that we've already seen that environmental economists, for them, they attach value to goods and to environmental goods and services, and the value will only be that the value attached will only be on grounds that people are willing to pay for those environmental goods and services. Whereas ecological economists, for them, we have seen that for them, they only look at environmental goods and service, the value attached to environmental goods and services in terms of inherent values. And what are these inherent values? In terms of, for example, the rights, the justice to these environmental goods. And then these environmental economists, we've already seen that for them, they look at, they attach monetary terms to environmental goods and services, whereas the ecological economists, they don't, their value is non-monetary in nature, right? And then in terms of market-based solutions, the environmental economists, of course, they advocate, we've seen that they advocate for market-based solutions to solve market failure, We shall be looking at market failure in the next topics. And but for simplicity, pollution is an example of a market failure. Pollution, air pollution, water pollution is an example of a market failure. So the environmental economists, they advocate for market-based solutions like taxation of polluting farms, whereas the ecological economists, yes, they say that the market-based, they do not oppose market-based, so the ecological economists do not oppose market-based solutions, but they say that these market-based solutions will not really be able, much as they may solve the negative externalities, but also they may also fail. Like we shall see later on, that as the government comes in to solve these negative externalities like pollution, in itself, in its capacity as government, it can fail. Are we together? So much as the government may come in to solve the negative externalities like pollution, in its capacity in doing so, it can also fail. And when it fails, it becomes a government failure, which is basically a macro failure. So ecological economists, for them, they are saying that they are not disputing the issue of market-based solution, but they are saying that that market-based solution are just at micro level. Market solution are not at macro level issue. Then in terms of considering future generation, the environmental economists may not really give so much weight to future generations, whereas the ecological economists, they attach value to future generation. We've already seen that ecological economists are ecocentric in nature. They are ecocentric in nature, literally meaning that they put nature at the center of analysis. They put nature at the center of analysis. Then in terms of value neutrality, the environmental economists, for them, they attach their objective in nature, or they consider value neutrality, whereas the ecological economists, for them, they are pluralistic in nature. In other words, these environmental economists, they attach value, yes, but the ecological economists, for them, they will not only attach value, but they will look at the environment in different other aspects. Yeah, are we together? In different other aspects. Then in terms of sustainable development, the environmental economists, like we've already seen, that the environmental economists are anthropocentric in nature. And anthropocentric means that they look at human beings. They look at welfare, the welfare of human beings at the center of analysis. Those are environmental economists. Whereas the ecological economists, for them, we've seen that they look at nature. They look at nature at the center of analysis. And therefore, they consider, the ecological economists, they consider the ecological functions. And what are those ecological functions? For those of us that were here, that were early in class, we saw those ecological functions when we were looking at the circular flow of economic activity. Remember, we saw the standard circular flow of economic activity, which was basically looking at the flow of resources, the flow of factors of production like land, labor, capital, entrepreneurship, between different sectors of the economy. And we looked at a two-sector model, which is basically comprised of the business firms and the households. And we saw factors of production like land, labor, capital, and entrepreneurship flowing from the households. We saw that arrow flowing from the households to the business firms, right? And then also in turn, we saw that the business firms also now make payment to the factors of production. And what are these payments to the factors of production? We saw that for labor, there is wage. For land, there is rent. For capital, there is interest. For entrepreneurship, there is profit. And then we also saw another arrow where the business firms are providing goods, they are selling the goods and services to the households, right? And we also saw another arrow moving in a different direction, whereby when these households are buying the goods and services from the farms, in turn, they are paying money to the farms. So basically, that was the secular flow of economic activity. But then we saw that with the ecological economists, yeah, we saw that the ecological economists, they said, we realized that this circular flow, right, the standard circular flow of economic activity was leaving out certain elements, ecological functions, yeah. And which ecological functions were these? Libra, if you can remind us. Libra, you are first in class here. Tell us those other sections that we added.
That was solar energy.
Very good. Yeah, we saw solar energy. For example, in this standard circular flow of income, we saw that it leaves out the ecological functions like solar energy. Yeah, solar comes from the sun. Solar energy comes from what? From the sun. So we know that even this solar energy when, for example, this normal hydroelectric power is off, right? The solar energy can provide us the lighting, it can provide us the energy that we use to manufacture, for example, these goods and services. Are we together? So the environmental economists do not consider that. Are we together in the standard circular flow of economic activity? And then we also added another element, which was the heat waste, that as these factories, for example, are emitting this the pollution, there is that heat that is being released, right? That is also an ecological function. Then we saw the natural inputs, whereby these natural inputs, for example, we have these minerals, yeah, that can be used, yeah, those resources that can be used as the inputs into the production process in the industries. And then we also looked at what else? We saw element of pollution, right? That this standard circular flow of income, the economic activity, it only shows the flow of these resources between different sectors of the economy, but it leaves out issues to do with the pollution. Are we together? Pollution. So ecological economists, for them, they will look at pollution. Yeah, they will look at pollution. And so basically, and then in terms of limits to economic growth, the environmental economists, for them, they say that they do not really see the limit to for them, they say that perhaps not, at least in that, they do not see the limits to economic growth. Yeah, they do not see limits to economic growth, but the ecological economists, for them, they say that, of course, we've seen that they are eco-centric in nature, the ecological economists, and of course they put natural resources at the center of analysis, right? And so here, for them, the ecological economists, for them, they say that there is very likely to be a limit to economic growth as long as there are limited availability of natural resources, as long as they are a limited availability of natural resources. So unless there is any question, there?